Good morning, everybody. Welcome. This is the Saturday morning Viper Trading webinar. Today is Saturday, March 23rd, 2019. Got a good, this is part two of a two-part series. We started on Thursday night, which is Learn 3 Trade Setups. I'm going to briefly go over a recap of what we covered on Thursday night so everybody's up to speed, and then we will quickly move into some new subject material. Without further ado, let's get our standard disclaimer out of the way. All communications from Viper Trading Systems are for educational purposes only. Futures trading does involve risk, and there is a risk of loss. Nothing contained in this webinar, other webinars, including the live trading room, are to be construed as investment or trading advice. And of course, everybody in here this morning does know that you do trade at your own sole discretion. See some folks just coming in. Don't worry, we're just getting started. You haven't missed anything yet. Let's get over to some charts and begin our recap. On screen one. Yeah, okay, here we go. All right, so I'm going to do a pop quiz here and see how many of you attended last Thursday's webinar or watched it, the recording that we posted yesterday. In that webinar, which trade setup did we refer to as trade setup number 1? Go ahead and type in your response. What did we call trade setup number 1, both on the long side and the short side, in the Thursday part 1 webinar? So we're recapping, and I'll actually show some of these in just a minute. So we're just going to verbally kind of go through them and see if you know or remember what they were. Right. Trade number 1, trade type number 1, both if you're trading the short side and the long side, are located at or around the midband, which is defined as this area on the short side right up in here. Either physically on the candles on the midband itself, or the band immediately above it, which is band number 5, or the midband immediately below it, which is band number 4. Good. That is trade setup type number 1. Now, trade setup type number 2 to the short side is located where? Here, let me help you out. I'm just making this super easy. So this is band 1, 2, 3, 4, midband, of course, the thick, chunky one. 5, 6, 7, and 8 is the outermost band. So which out of these 8 bands is trade type number 2 for the short side? If you're going to take a short, where is it located? Trade type number 2, taking shorts. Some of you are struggling a little bit here. That's okay. That's how you learn. Take a shot at it. Just take a guess if you don't know. It's perfectly okay. Perfectly okay. This is part of our recap here. All right, time's up. It is located on the short side in band number 3, right here. In fact, let me show you an example one right here. That's called a minimum criteria trade to the short side. And the requirements, as you recall, are closing above the stealth, which is the thick, snaky line. Let me back up a second. I see there's quite a bit of new faces in here. Some of you might be just looking at this for the first time. So let me explain what you're looking at here. We here at Viper trade intraday movement of the futures markets. Okay. This isn't your old buy and hold, buy IBM, buy Apple, hold it for 20 years, 401k investment program. This is short-term volatility. We look to be in and out in the morning. We close all positions when the market closes. We don't hold anything overnight. We're not exposed to overnight risk. This is strictly primarily a cash flow daily operation here. Okay. And so we are connected to our broker, a data feed to NinjaTrader broker. And this is the NinjaTrader platform. We're exclusively on them for the past 10 years. We have written scripts in C#, the programming language of NinjaTrader, which are as follows. What you see on the screen are background colors, bar colors, the power meters, which are the trends on the chart, power meters. Predictors are swing levels. The stealth line, which is this little sort of sneaky snake-looking line here. It's either red and a downtrend, and it's green and an uptrend. And the most prominent thing, of course, is the bands. And I showed the bands earlier. With the mid-band being the most prominent in the middle, we consider this trades that come to at or around the mid-band pretty much kind of one of our top go-to trade types. And we'll be showing quite a bit of that today. When you are, the characteristics of what we call a downtrend are here, for instance, from approximately 7:45. I think this was Friday morning. I believe it was Friday morning. Are the fact that you have a red background. The mid-band and all the bands are stair-stepping down like you see here. Bars are predominantly red, although there can be some yellow and blue sprinkled in there, as you see right over here and here. And so we are what you call retracement type traders. And you've heard this hundreds of times from both Gary and I. And when you go into a trending type move, the first part, of course, is the thrust. In this case, the thrust is down. When you are in a downtrending condition, we only look to take short trades. Now, there are some exceptions to that if you're at the market open or like an inventory number or some critical news, like Fed minutes or Fed, those kinds of things. Then you can let the market kind of go either way because you're going to get more of a roller coaster. But when you're in a pronounced trend down or up, you want to trade, it's like swimming with the direction of the river, right? You want to trade in the direction of the trend. In this case, it's down. Now, so what we were defining as the three trend types, or trade types in a trend, is trade type number one being that, let me just show this like this. So you have a thrust, and you have what's called a retrace. And you have, if a trend continues, of course, then you have another thrust, and then you have a retrace. And it continues in that manner all the way down, all the way down, all the way down. Now, in a downtrend, this is a pop quiz question, make sure everybody's awake. What causes these retraces in a downtrend? Like here, and here, and here. This area right here, all these retraces. Why? Why does it do that? Why doesn't the market just go straight down? Why doesn't the selling start here and just straight down, straight down, straight down, all the way down, down in here? Why is it pulling back like this? What is going on here? Here's a big one right here. This whole area right here. Pulling back, pulling back, pulling back. Goes down. Look at it. Look at it. How many times did it happen? 1, 2, 3, 4, 5, 6, arguably 7, 8 times. Down, back, down, back, down, back, down, back. But what's going on? Why is that? Why do markets do that? They all do that. Right. Profit taking on the shorties. The shorties, just like market participants all over the world who trade these markets, the E-mini S&P, are looking to cover their shorts, which is how you make profits on the short side, yes? And when you take profits, it creates in a downtrend a natural updraft, which creates the pullback or the retracement, right? And so then if we know that, that's the fundamental principle of how the market moves, then we have to decide where we're going to get in. And that's how and why we define these areas of why and the criteria and the rules of how and where we get in. So what happens here, and let me just go through each one of these sort of individually, and then we'll move on, is that there are various, and most of you know, of course, that a lot of this is computer driven. This is all algorithms. These are scripts from the big boys. All the banks all over the world are trading these markets. And so what happens is, the reason that the thrust occurs is that the sell programs take over and push the market down, right? And then there is a modest amount of short covering, and that's why you get a pullback that's fairly shallow like this. Now, let me blow this up and explain what's going on and why we do what we do. In this modest amount of profit taking here, you can see that the market only came back this far, right? So we consider this a modest amount of profit taking or short covering in the downtrend. Now, why have we set this area in particular as a minimum criteria trade? How about this one? Why not this one? This trade worked out. Why is that not a minimum criteria? Here, let's look at some other ones. What about this? Here, how about over here? Here's a pullback. Here's another one. Here's quite a few of them. How about this? Why not that one? That doesn't meet it, but it's a pullback. Why have we set this area in the downtrend as a minimum criteria for entry? Why have we done that? Anybody? Huh? How about these little ones? This trade worked out. Look, you got a scalp out of it. How about that one? That was one, right? No? That's right. There's not meat on the bone on the retracement. On these very shallow ones, okay, let's say hypothetically, let's do a shallow one first. If you've drawn that box as we have shown, and you use a region box with our object trader tool, and you're filled the close of that bar short, and you're looking to get down to, let me take this out of the way here for a second, just for the purpose of explanation. Your goal when you get into a short in a retracement is to at least get to where the last swing was. In this case here, it's here. Can you see the lines? These are one of our indicators that show the swings, yes? In this case here, it's here. Now, can you see the difference between the depth of a retracement that looks like this, filled on the close of this bar to get here, versus getting in from this box to get all the way down to here? Which one of those two trades has the more likelihood for more profit? The one on the right here, or the one on the left? Of course, the one on the left. In this case here, your stop is up here and your target is down here. It might be 50-50 or it might be 1.5 to 1. In this case here, your stop is way up here and your profit could only be potentially this right here. Now, it went through it, so this is an example where it worked out, but a lot of cases it'll come to that swing and bounce and stop you out. Yeah, the deeper retracement. Yeah, that's why we do this. So the reason we have minimum criteria on these is that in the nature of the movement of push, thrust, and retracement pullbacks is that there has to be sufficient distance in the target for the trade to make money, right? That's why we call that minimum criteria, because if it doesn't go that far, it's not deep enough to give you, as we say, meat on the bone to make any profit on the trade. Now, what's even better, of course, is if you go deeper than that. And that's why we like the mid-band trades. In this example here, to the right, we can see that the swing level is down here from the prior thrust moves. So thrusting, pullback, thrust, pullback. Now just notice this right here. Make note of this. With this depth of retracement here, how far is it between there and the swing? Down here. Well, let's do some quick math. We're saying support, I'm just going to use round numbers to make this easy, 24-ish. And you're coming down looking to get short at 29. That's 5 points times 4 is 20 ticks. And your initial stop is only up here, maybe 6 or 8 ticks above your entry, maybe 10 ticks. This is almost or more than a 2-to-1 risk-return relationship because you have sufficient depth and retracement and your target is down here. Can you see the difference between these three trades that I'm showing? The one being the most shallow here, the one being the minimum criteria here, and the one being the mid-band here. And these are mid-band trades too, as well. Here's another very deep one. It has even more promise than the other ones because its target is also down here, which would be over 20 ticks. I don't think we've ever taken the time to really explain that in depth, but if you're ever wondering why we have approached the markets in this manner and how prominent the bands and the lines form take part in our trade entries, this is the logic behind it. Yeah, Hardy says, I like to take the mid-band trade most often. Most traders do. In fact, truth be told, that's my favorite go-to trade every morning is a kiss and roll in a short off the mid-band or a pullback in a long trade off the mid-band. I love mid-band trades, especially when a market's trending very nicely. They tend to turn out very favorable, very high percentage of win rate. Well, the entry is, let me get into that in a minute, Marco. Just hang tight with that question. I'm going to finish the trade types, and then let's discuss the specifics of entry. Okay? Yeah, just hang tight on that. Hang tight on that. We will come back. We will circle back and answer that question. Now, let me come down here and show the third in a short condition, and that would be over here. Stand by. Let me advance the chart. Okay, let me set this up appropriately here. Hold on 1 second, please. Now, I'm going to show you what is called the third trade type, which is considered a deep retracement. Now, and this confuses some people, and some of you traders are not some of you don't like this particular trade, and that's okay, but we're going to teach it anyway because some traders like it. So in the case here, we have a series of thrust and retracements. I'm just going to show it like this, down to a swing at 09.25. And we begin to retrace up, and it pushes beyond the mid-band and goes almost to the line 6 up here in what's called a very deep retracement. And the bars, in some cases, turn blue. Now, the thing that tends to be a little confusing about this is twofold. First of all, you may be concerned that the mid-band did not hold as resistance, and that's totally understandable. Secondly, you may be sort of, you're not confused, but concerned that the bars have turned blue. Because blue we associate with uptrends. And so a lot of traders will look at this and say, whoa, wait a minute, hold on. Oh, blue bars, this could be a trend change, yes? Now, if this was going to be a trend change, what would need to happen? Would the bars kiss and roll resistance and roll over like this? And like this? And like this? Would this type of price action be considered indicative of a trend change, yes or no? Right here. Is this trend changing material right here? In and of itself, right now. In other words, has the trend changed from down to up? And I'm going to draw a box around it. In this, to be specific, in this area right here. Yes or no? Has the trend changed from down to up in that box? Yes or no? Blue bars. What do you think? Are we looking to take longs in here? What do you think? Is this long material yet? Or is the trend still down in your opinion? What do you think? What should you be doing in here? Still shorting it or looking to buy? Right, trend is still down. Now, you could make note of the fact, and you should, that you are starting to get a series of slightly higher lows here. In other words, it's not checking and breaking the bottom as it did over here with these thrusting moves. See, in a trend, can you see the difference between an area that looks like this and an area or a price action that looks like this? Clearly, you can see there's no question that this is downtrending price action. Very clear downtrending price action. Now, you could make the case over here, and we have a term for this. We call it sideways to down. So if you make the case that it's sideways, I would not argue with that. I would say, yes, it is clearly sideways, no question about it. However, the overall trend is still down, and you're still looking for shorts on rollovers. Now, that being said, you need to practice this, you collectively, the whole team here today, everybody listening on the recording, you need to learn to practice these types of trades. Some instruments are notorious for having huge pullbacks that go, way up into here and then roll over and really turn blue and really start looking like they're going to change trends. Namely, Russell sometimes, right? And then Russell will come down, and what will RTY, what will it do? It'll come down, dink around the mid-band here, and then next thing you know, the Russell's doing this. Wee-hoo, all the way back up, right? NASDAQ, E-mini NASDAQ, NQ was notorious for that. Remember, you had to babysit that thing in the room all the time? And remember, for years, YM was so controlled, the E-mini Dow. We love that instrument. It was in our room for years. And then all of a sudden, the algos kick in. This is what the big boys do. They decide, okay, let's run our scripts against YM this morning. And sure enough, the thing turns into a crazy instrument. It doesn't respect any support and resistance. It's just flying all over the place. And then one of the reasons I'm saying that is that type of price behavior is extremely difficult to trade. You almost have to be a fingered computer to trade it because it's just flying all over the place. The reason we like ES, very heavily institutionally traded. Notice how it respects these swing levels pretty well. It's not flying all over the place. It takes plenty of time to make these moves. Here, let's just put this in perspective on the short side here real quick, and then we're going to look at some long trades. Now, this retracement here started at 816, and by the time we got all the way up here, it was 819. Is 3.5 minutes enough time to make a decision on where you want to get into a trade? 3 to 4 minutes. Is that enough time to look at where you want to get in? That's an ocean of time. You're swimming in time. Here, let's look at this one. Here, this swing was at 812. And by the time it kissed the mid-band, you're looking at 815. Yeah, using the object trader. You could draw an object box. You could put a limit order in. You could draw a trend line retracement with a break. All manner of ways to get in here. No question about it. That's the point I'm trying to make. You got to find an instrument you really like. And then when you do, become an expert at it so that every day you know how that puppy's going to move. That's how you make good money. All right. Are there any questions on the trade types on the short side? Okay, I'm going to begin a very quick recap of the three trade types in an uptrend. Any questions on the downs? How to enter short trades in an uptrend, or I'm sorry, short trades and retracements in a downtrend. Okay, I don't see anything. Moving on to the long side. All right, here we go. Okay, let's look at it this way. I'm going to do a long recap. That's a good question, Larry. Yeah. Here, let's do the long recap, and then I'll circle back to that, and then we'll answer some questions. Okay. So the minimum criteria. Let's just flip our view of a market from the short side to the long side. So the prominent features of an uptrend where we are taking long trades are, of course, a green background. Yes. Bars are predominantly blue. We have the mid-band and all the bands are stair-stepping up, like a set of stairs going up to a second floor. You have a green stealth line, and of course you're getting a series of higher lows and higher highs. Now I'm going to show the minimum criteria retracement trade on ES and an uptrend as such. Clearly, you can see that this is the thrusting part of the up move here, creating the beginning of the uptrend, the first leg of it, if you will. Larry says, I wonder how anybody could not make money trading these trade setups. Well, I suppose it's possible. It really just takes time. It takes screen time. It takes practice. You've got to pick an instrument. You just got to, you can't, you've just got to put the screen time in. You just have to practice and put the screen time. And once you do, it'll start clicking for you and you'll start making money pretty consistently. But notice this retracement right here. Here we pull down below the stealth line. The green line is broken, our little sneaky snake line here, right? And line 6, the thin green line on the top of band number 6, is called line 6 right here. And we form a little box in this area right here. Now on the long side, this is considered a minimum criteria trade for entry. Very similar to the short side, it's because there has to be sufficient distance between the retracement level and the target, which is going to be, at least for a scalp, to that first swing right there, right? Now you can see here, all these little tiny retracements did work out okay. Here's one right here that almost made minimum criteria, but didn't quite, and worked out quite nicely for a scalp, yes? There's a couple of them over here too. Here's one right here. Here's a little one that just sort of sat almost minimum criteria, but not quite. Turned out to be a beautiful trade. Now, when you have powerful uptrends, can you take these other little boxes? You can with tight stops. It technically doesn't meet the definition of our minimum criteria. However, if you have missed the entry, say you didn't get in here, which we did, and you didn't get in here, and you get a little back like that, could you jump in? Sure. It doesn't meet our minimum criteria per the definition of it. But a lot of times when these algos, these buy programs are running, it's like a freight train. You just got to jump on and ride it. That was the minimum criteria you took, Brian, on Friday, huh? You recognize that trade, don't you? In fact, the original entry that we called in the room and Gary drew and we both took was at 6:30 right here. We had a box drawn right there before the market opened at 6:30. We had this box here. I took it with 4 contracts. This was beautiful. This was just textbook entry. Now, going back, you might say, ho, hey, ho, 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 Mr. Boyle. Hold the ponies. All due respect, Mr. Charles, when this box formed at 6:30, the background was red. The trend was down. You just told me in the past 31 minutes that in a downtrend I have to patiently wait for retracements. And here's some examples of mid-band shorts right here. Short here, breaking down short here. Why in the heck are you taking a long trade at the open in this box? That makes no sense. You're flying in the face of what you just told us for the last half an hour. What is the matter with you? And that's a reasonable argument. But does anybody recall what I said when we kicked this thing off and we discussed the areas where there could be exceptions to what you do? What was one of them? Remember, we have the rules, and we said these are rules that you should, short in a downtrend, kiss and roll in a downtrend, buy and pull back and support in the uptrend, long trades only, short trades only. What was one of the exceptions to that rule? Yes, some of you got it. I kind of snuck it in there, and I'm going to come circling back and make sure everybody heard it. It's the open of the market, yes. 6:30 a.m. Pacific time is the open of the equity markets, and it is quite and very possible, almost every day, that the market is going to go wherever the programs are going to take it. So you have to be open and flexible and let the market run. Let it pop in whatever direction it wants to go. It could go up. The buy programs kick in. This could have continued down. So in all due respect, this box should have been enabled on both sides, right? You should have let it, because at the time the box drew, it could have gone down this way. Yes? It just happened to go the other way with buy programs. Burst up out of it. Good. Everybody caught that. Good, good, good. Yeah. Open and news events. That's, normally 7 a.m. Pacific, there can be some news events, and you can let it go either way on that criteria too. Let me show you the two other trade types in an uptrend. And then I'm going to go on to look at more complicated subject material, which is going to be when these trades don't work and how you deal with it. In this case here, you can see that the retracement to the midband on the uptrend occurred right in here. Here was the final gasp, so to speak, here. Okay, pop quiz. Get your spidey sense up. Is this a minimum criteria trade, yes or no? Those two bars. Just 5 seconds. Just hit it. It's just boop. Why? Boop. No. Why? Just a Y or an N. Boop. Boop. 4 seconds. Just making sure you're awake. Here's some snoring out there. It's 9:30. Got to wake up. Time to trade. If you got that price pattern right there on ES on Monday morning, would you take a long, yes or no? 3 seconds. Minimum criteria, yes or no? 2 seconds. Yes or no? Boop. 1 second. Based on what you've been taught so far. That's right on the screen in front of you. So, time's up. Well, let's look at it. Is this two candle configuration like this one, or is it more like that one? Remember, we looked at this earlier, just a couple minutes ago. Which one of those two conformed to, out of these three, 1, 2, 3, which one conformed in our last explanation? The middle one, yes? Now, does these two candles in this little box resemble this, this, or this? This one. Because it has gone below stealth, yes, check mark number 1, and it's gone below the thin green line 6, check mark 2. Yes, this is a minimum criteria trade. So if you answered yes, you were correct. Now coming back over here, can you see that profit taking has occurred on all the bulls who have run this thing up back down to the midband right here? Now this is the definition of a long trade box sitting at the midband in an uptrend. Now, you didn't get filled on it, right? It never filled, and it went deeper. Can you see in this case here, just like what happened in the case of the short trade with ES, when we went deeper to the other bands, this is considered a deep retracement trade, where you're going deeper to the other side. You're going all the way to line 2 here, and the bars turn red. But is this, let me advance the chart, and you tell me whether the trend has changed or you still think it's up. Okay, are you ready? I'm going to advance this chart. I'm going to replay this chart like it's happening in real time. And if you think it's a trend change, you type in TC. Ready? Here we go. Okay, I'm going to advance the chart. Some red bars there. Looks like they're going down. You're under the midband. Better be looking for shorts, huh? Trend change, maybe a foot. TC. Hold on, wait a minute. What the heck? What is that? Came back through the midband. Blue bars again. What the heck? Sitting on that line right there, and then what the heck? It takes off like a bullet. What? No TC. Now, here's the thing I want to tell you about this, and you've heard me say this before, is that, deep retracement trades like this are not for everybody. Okay? As I've said on other instruments, they can go super deep and then flip on you and run back the other direction. So you got to be careful with that. Even the S&P is a lot more controlled in this regard. So, it's a little easier to take them. Was there other re-entry spots if you didn't take the deep retracement? If you didn't take this box, was there other places to get in to participate in this last run here? Yes or no? Do you see any spots where you could have got in if you missed this area right here? The red bars bothered you. In your opinion, it was too deep. You thought it could be a trend change. You were nervous to get long. Whatever the reason was, you didn't take the long down here. That's okay. Now, when these things bounce, are there other spots to get in if you missed that entry? Do you see any here? Remember, we're retracement traders, right? Were there other retracements that allowed you to participate in this long trade after this circle formed, yes or no? You don't have to say where they are. I know I see where it is. Do you see where it is? The pullback right here? Okay, good, yes. Did this meet a minimum criteria trade after the bounce? Yes or no? After this bounce right here, and you get a pullback in here, was this another spot to enter long? Yes or no? In that box? Yes, absolutely it was. So now that doesn't always happen. It happens a lot. I mean, I can't give you a percentage, probably at least 75% of the time. 70, 75, 80% of the time. 2/3 to 3/4. You're going to get a chance of it's going to pull back a little bit somewhere in there and give you a shot, second shot. Clearly down here, there's a better entry. Because by the time you get up here, you're already taking profits by the time this trader's getting in, right? Okay, good. Tell you what, we're all the way at 840 here. Now, I want to get into, I want to show some other trades where, you probably are not subject to the conditions conducive to the 3 long types and the 3 short types. Now, before I show this, are there any guesses as to what condition that might be? Some of you already know what it is because I've showed this a million times in other webinars. No, maybe not a million, probably at least 200. What might be a market condition where the 3 trade types that we're talking about here are not conducive to taking those trades either at the mid-band or line 2 or line 6? What might that be? Any ideas? Because I'm about to show it. What could it be? Remember, one of the conditions, what is the preeminent condition that has to occur before we can take those 3 trade types? There has to be something present in these markets. Something has to be occurring to make those trades appropriate. And if it wasn't there, might it make it inappropriate? Starts with a T. Brian, you're funny this morning. Murphy's Law? No, it's not Murphy's Law. You guys are funny today. Brian says, I'll take ranges for 1,000, please, Alex. Trending or not trending? Exactly. Range bound. Good. That's right, Minaj. Exactly. Right. Larry, stair stepping. Trending up or trending down has to be present. Choppy markets, lack of trend would be applicable. And I'm going to show you how you can quickly figure that out, because that's the key, right? Everybody says, oh, well, Charles, I got, you're such an armchair quarterback sitting there in your fancy chair on a Saturday morning, all relaxed, cup of tea there, had your breakfast, you're all in a good mood. Yeah, what about when it's flying in your face? Huh? What about then? How do you know? Well, that's a great question. How about we figure that out? Tell you what, here's what we're going to do. Here's what we're going to do. Let's look at some conditions. I'm going to flash some conditions in front of you. And then you're going to tell us, the team collectively, we're all going to work on this together. And let's start with this. Whether you think, and I'm just going to flash them up. I'm not going to do them in real time, and so that we can learn, kind of what we're talking about here. And then we'll do it together, so you can see how to do it yourself in real time. Because you might be trading pre-market and live rooms not open. You might be trading late at night, rooms not open, and you got to figure this stuff out, right? All right, let's start with this area right here. This would have been the close going into, what's the date? 21st? I think this would have been Wednesday afternoon. Ready? Now you tell me whether you think this is trending or range bound. So if there's a trend here, you're going to type in a T, and if you feel that it's range bound or not trending, you will type in an R. I'm referring to the area to the right of this line right here at 10:15 Pacific time. To the right, all the way into the close of the market and through the, here is the Asian session. So market close was right in here in the U.S. Asian market kicked in here, and then of course here's midnight, and this would have been the beginning of the European session over here. So basically this was the Asian close, Asian, European session. This area is circled by my cursor. Is this trending or not trending? Right here. What say you, team? Choppy mess? Range bound? Chippy, choppy, Brian? Yeah. So what are the characteristics of chop? And are mid-band trades prudent in an area like this? Well, the first thing we do, and most of you know this, of course, and Gary does this all morning long in the room, and that's why we do it, is you got to put some lines on the chart. Now, you would put a line up here, and all the way back here, you saw this was resistance, so this was nothing new. And I would put two lines at the bottom area to define the bottom of the range. The first one, of course, would be at this swing right here, which occurred prior to the 10 o'clock hour. And then this one here at when that swing formed right in there. Now this is an area of range-bound price action. You can obviously see that mid-band trades are not a good idea, mainly because the risk return in here is not very good. You're basically bouncing between, line 2 and the mid-band and 59.35 resistance area. Could you scalp that? It's hard to say. Probably not. Would you have drawn a box here? Obviously, you wouldn't have taken a short because you're sitting right on support. Maybe you drew a box here. Let's look at an example of what would have happened in this condition. You could have been possibly filled on the close of this bar right here long, and you would have had to been looking to take profits as quickly as right here. Once you factor in a little bit, this tick or two slippage and some commission, is there any money in this trade? In any of these trades, even if you were shorting it, which could be dangerous because it could flip on you. Is there any money in this trade? How about any of these? How about any of these mid-band trades? It got up mid-band to here, mid-band to here, mid-band to here. I mean, geez, that whole distance is only, 59.16 to 59.11 ticks. Well, here's the key. How can we know ahead of time or as it's occurring in real time that we are in a choppy condition. You can't, Gene, you can't take trades in here. That's what I'm trying to tell you. This is a situation where you have a very tight range bound condition where there is not sufficient meat on the bone. There's not enough distance between where you would look to buy to get in and where you have to get out to make any kind of profit. And the risk is too high in the fact that, take an example here. What if you put a, you try to get long here and you get filled on a bar and then it stops you out and then you try to get in again to chase it. This is a recipe for disaster. And what you have to do is on your charts, just like Gary does in the live trading room, you got to put lines where there's resistance and lines where the support areas exist. You quickly do a calculation to see what this distance is. In this case, it looks to be around 20 ticks, plus or minus, depending on where the swings are located. Maybe a little more, maybe a little less. Obviously here it never got to here, and here it never got to here. So inside of here, it's less than 20 ticks. So when you draw two lines on a chart, and this could be any chart, you could trade 6E, it doesn't matter what the instrument is. If the condition looks like this, you have to assess whether there's sufficient distance in here for you to make money on trading the long and the short side. Let's look at some other examples. In fact, now that you know this, I'm going to do a crude oil exercise. In fact, let me clean this chart off and take everything off of here. Is there any questions on that? Because I'm removing all the lines. Yeah, you would want to see the market come out of the range and go into some trending type price action like a down or up. Stand by. Let me find another condition where this occurred. All right, I'm gonna start getting a little more difficult. I'm gonna start getting a little more difficult on this here, okay? Because this is the time where we're not going to throw softballs at you anymore. You're going to start to see some more tough, more realistic market conditions that don't just all kind of set up real nice for you. Okay, you ready? How about here? This would have been the tail end of the morning, late morning of the 18th. Excuse me. Sorry, excuse me. Now I'm referring to this area right here, circled by my cursor. Let me engulf this. What would be the difference as you look at this area right here? What would be the difference between this market condition and the condition we looked at just a couple of minutes ago? Is this area tradable? Yes or no? And if you were going to trade it, so it's a two-part question. Yes or no tradable, so that's a Y or an N. And if you were trading it, would you trade the long side L or the short side S? I'll give you 10 seconds for this one. I'm referring to the condition inside of this box right here. So the first part of the question is tradable, yes or no. That's a simple Y or an N. Boop. And then the second part of the question is, if you answered yes. If you answered no, then it's obvious. The answer is no. You wouldn't trade it, so there's no yes, there's no long or short to it. Yes, right? If you did answer yes, boop. Then the second part of the question is, are you taking primarily longs for your mode of entry, L, or are you shorting this market, S? There's 6 seconds left. I strongly urge you to try to participate. That's how you learn in these webinars. That's why we do them like this. We make them super interactive. There's only a few minutes left here. There's only a couple questions left to participate. By the way, I saw quite a few people come in late. No problem. Don't worry about it. This is recorded. After it renders, we'll get it up on the web server. So everybody will have access to it, okay? Because I see a lot of people had to leave early too, so don't worry about it. You can catch the whole thing. We'll send it out in about probably like 2 hours. Two-part question. Can you trade this area? Long or short? 3 seconds. Okay, quite a mix here. We got a lot of no's. Got quite a few yeses. And most of the yeses have responded with long only. Manoj, good call. So let's go back and look. What's the difference between here this box? Oh, I already erased the other one. I can't go back. Sorry about that. Oops, I erased it. Should have left it on there. Anyway. All right, let's take a look at this. Let's diagnose this. Is there a consistent background color? Well, first of all, I think the question is there a trend here? Because it is possible to have, in fact, let me just put this right on here so we can all sort of discuss this together. And I'm not going to make it confusing. We know the market conditions will be as follows. You can have an uptrend. In an uptrend, we take long trades. Yes? We have a downtrend, which we looked at. And we looked at the 3 different trade entries for shorts. Everybody's pretty clear on that. So when a market's trending, we're pretty clear on what to do, yes? And then we have sideways, also known as range bound, which by definition is the lack of a trend. Now, there are several flavors of range bound. Kind of like getting that Neapolitan ice cream, right? It's not all vanilla, it's not all chocolate, and it's not all strawberry. You got a little stripe of each one in there on the sideways market conditions. What are the 3 sideways market conditions? What are the 3 different things that a sideways market can do? Well, number 1 would be, I would define it as pure sideways. Pure, I'll just make it real simple. Pure range, where no trend is present. That was the one we just looked at. No trend was present. And the characteristics, as you recall of that, you just sort of go back in your memory, or if you're watching the recording, just go back a couple of 5 minutes to look at that condition. You will see that the background looked like a striped shirt, right? Remember, there's sort of red and opaque and green, and because it was coming all the way down to here and it was shooting all the way up to there, and the midman was in the middle. Now, is this a condition that we're looking at here where a trend is present and you are in a range? What is that called? That's called sideways to up. So a trend is present. Sideways to up, right? Oh, darn it, what the heck? This means that an uptrend is still present. So in this particular case, and I'll circle back for the 3rd and final one, which obviously is going to be downtrend, sideways to down, which you would be looking for shorts. So in the case of this uptrend, you can just, if we look to the left, we can see that we had a pretty strong uptrend that actually began over here. Let me find a place to put this. Right? On this particular morning, around 4 o'clock in the pre-market session, the market began to go into an uptrend, like such. So we have to take that into account when we're assessing what we're going to do in a range where a trend is present. Yes? Yeah, I do that all the time, Pat. I just didn't have time to do it this morning. Yeah, Some of you recall that what I normally do is I'll do these live drills where I'll advance a chart, right? How many of you seen those over the past few years where I do that? Yeah, I do that all the time. In this particular case, where I'm teaching the 3 trades setups and the lack thereof, it's a little more beneficial to use static charts, I think, for people to visualize this. Now, next Thursday, I'll go ahead and I'll do more live recreations. I know people love that. Where I go back and forth and we sort of reconstruct real time, and we'll say, okay, you say when a trade's there, right? And then you type in a T. This is a little bit different format today because I really want to just focus on the clearly seeing the trade entries themselves. In this case here, of course, after you went into the uptrend, you can see that there was a mid-band trade, a couple of them right here. Now, as the market continued, here's 6:30, here's the open of the market, here's a long trade out of the mid-band box, and then you're coming over here to 7:30, 8 o'clock. Now, we talked about this before, and the deep retracements in an uptrend, sometimes the bars can turn another color, like red, and they will come as deep as the opposite line, in this case, line 2. Now, having said that from a technical point of view, the trend is still up, and these bounces off of here with these red bars in the deep retracement condition are legitimate long trade entries. Would you agree? Here's a bounce here, here's a bounce here, and there was 3 of them. Well, arguably 4 of them. So technically, they meet the criteria. Now, I said this earlier in the webinar, and I've said it on Thursday night too. Do you have to take those if you're not comfortable with that type of trade setup? Of course, no. You don't have to take any trade you're not comfortable with. So I think that's sometimes what I notice is the feedback I get sometimes is that, well, that was minimum criteria. I see that was a deep retracement. Well, I didn't take it. I don't like those. I've never, so I always get stopped out on those. For some reason, it turns out to be a trend change, and they don't work out for me. If you're more of a shallow retracement person, minimum criteria, or you like the mid-band, well, then by all means, take the mid-band trades. Take the shallow retracements. If deep retracements, for whatever reason, just don't work out for you, you don't have to take those. And let me go in here, and of course, the third type of sideways is condition is sideways to down, where you are still in a downward condition or downtrend, right? In which a downtrend is still present. So the background would be red, right? And you would still be looking for shorts. And you would take shorts. So the only one of these conditions where you really would look to stay out of, in my opinion, is number 1 in the range bound condition, where it's a pure straight up range. It's just flopping around the mid-band here, and there's no clear direction to it. The background looks like a striped shirt. You can put a line of support and resistance like we did earlier. Mid-band's probably right near the middle, so it doesn't make sense to take those trades, and especially if it's under 20 to 25 ticks. If it's in a 10 or 15 tick range, it's really not tradable. You need to just stay away, find another market that's trending, or wait until it breaks out and pulls back and then look for an entry. Yeah, that's true, Larry. You've noticed that. Good. Some people like that type of teaching. Some people don't. We keep showing the same thing because that's how we trade. And it's that repetition that allows you to learn it. Yeah, you might say, well, I've watched hours and hours and hours of yours and Gary's webinars, and they all seem to say the same thing. Well, that's because that's how we trade it. All right, I don't see any other questions. Let's go ahead and wrap.